If you are not able to identify key areas of interest, or you are able to identify them but you cannot take advantage of it, then this video is for you. There are 5 steps to follow. But first I will be going through the technicals, and then I'm gonna be revealing the 5 steps at the end of the video. There will be things that I will only mention during the analysis, so please put your focus on this video for your benefit. So this is the ES, and I'm gonna start from the beginning of the week, which is like Sunday open. And I'm gonna take you through the whole process and just try to keep it as simple as possible, how I see it, so you can just replicate it. As we can see here, we have this area right here that has not been retested, which resulted in a big move. We have this area right here that has not been retested, and we also have this area right here that has not been retested. What I mean by retested is that we did not come back to it. So those are on the 4-hour time frame. We have the high and the low. Where is the price most probably going to go to? And this is where our 2 steps, which is market structure and trend, give us an idea, give us a higher probability. In this case, we can see that the price went above this area, okay? And then when we try to go below this area, which resulted in this break of structure, we just wicked below it. And for me, a wick is not a break of structure. We wicked below it, took liquidity, and then we went higher. So in my opinion, the price will come back to this area. Now we can go lower in time frame. This is the 4-hour. We can see that it has not been retested, okay? In the 1-hour, we can see that this is our area right now, okay? It's a little bit bigger. But on the lower one, we can see that it has been retested right here. This is our 4-hour area. It has been retested right here. So we can take this area and put it right here. Why? This was the last retest of this order block before expanding higher. So as we can see, the price came back, respected it right here. We got our first retest, and then we got our second retest. If we want to look closely, we can go now to the 15 minutes time frame. We can see that the price, when it came to retest this area, okay, it did not reach the fully imbalanced area, which means that we could retrace back to it. And this is what happened right here. So now what I'm thinking in my head, that we rebalance this area, and the area below is also rebalanced. Then our next area is gonna be to go higher, to expand higher. So this is the bigger picture, but let's go a little bit through to the intraday. Like, what will our setup be for a Monday? Okay, this is Sunday. We are expecting the price to expand higher. We can have more confluence like the DXY, but for now we're gonna keep it simple. This area right here is what resulted in the move down, okay? And this area right here, I want you to focus right here. This is the wick and this is the order block. We expanded higher, right? But our area, what would it be? Would it be this one or would it be this one? So it's always the last candle which retested. So it will be this one. And here I want you to pay attention because sessions matter. Like if the order block happened in New York or in Asia or in London, it makes a difference. I'm gonna show you what I mean by that. So now we have the price right here. We have our 2 areas of interest, this and this. We know the longer term bias is bullish because we want to reach the area higher. We're gonna wait to New York open. So this is New York open, but this is not the stock exchange. This is the stock exchange open right here. It reacts from our area right here and it goes down to the area right here. Let's keep going. What happens next? Okay, we can see a reaction. Now, how do we take advantage of our areas? This is the second thing that we want to learn in this video. Guys, if you're finding value, just please give me a like and subscribe. It will help me grow the channel and give you more content out. Now, we know that this order block, like this move down, happened at 8, which is the New York open. But the New York exchange happened at 9:30 and went below. So this area right here is not rebalanced and it's on the session before the New York exchange open. So this gives us higher probability that the price might go and retest this area. Let's go to the 5 minutes in order to get a confirmation this will happen, I would like to see the price go above this area, which caused the move down, but also not reach this area right here. So my idea is I want the price to reach a little bit closer to this area, but not touch it. Okay, because if we touch it, then we might go lower, which is, this is an order block. I will show you what I mean. I want to keep it simple. I will not complicate it. Let's go. Price goes higher, doesn't touch this area. Some principle that I want you to know is we have to touch those areas. Okay, like this area has to be touched to the order block. It has to, the wick will hit the wick. The price is really precise. It's not random. It's really precise. We come to this area and then we go lower. Now we can go lower in time frame. We got our confirmation that the price wants to go higher to retest this area right here. Okay, this is our first one because we are bullish in general. Let's go to the 1 minute. This is our last push up. This is our order block right here. And this candle retested this order block and this order block, as you can see. And then this candle right here came and retested this order block, this candle that already retested these two order blocks. Now the last candle which retested the order blocks, okay, is this one. As we can see, it has been respected. 1 time, 2 time, price goes higher, and then we want to see this hold because this is the last candle, okay, which is respecting the order block. If this didn't respect it, then I would definitely wait till this area. If this didn't respect it, then I'm probably not gonna take the trade. Let's keep going. Okay, so as we can see, the price right here got respected. We went higher and then we retested this area right here. So in that case, I will be taking my trade from here and putting my stop loss below. My target is gonna be at the beginning this area, and then after that we're gonna target the area above, which is definitely the area which started the move, which is the New York before the stock exchange. So this is the area right here. We're gonna see what happens next. We expand higher, and this is our order block right here also. If the price goes above this, we can expect that our TP is gonna hit. Okay, if the price reacts from this and go lower, then we're probably gonna be wrong, and then we're gonna take a loss. But our probability is higher to go higher because of all those things that I explained. So now we keep going, and as you can see, TP got hit. We have a little bit of consolidation here. So basically you can take profit right here, and you can leave some runners because we know that our target is actually this area. This would give us a 5-to-1, 6-to-1, something like that. Something to note is that when I see those being made and without, for example, this one would end up being a breaker bar. This is being made without breaking structure to the lower side. Our trade is valid until we break this block right here. So if we are above it, then we are bullish. This area is an area that we could see a reaction from, but as long as we are above this area, we are bullish. So as you can see, this is another one. So this is the first one, and this is the other one. Okay, this is the other breaker block right here. This gives me indication that we are gonna go higher. And as you can see, the price goes higher to our next key area right here. Now this is where the price comes, take liquidity, but also hits this area right here. This has been retested. If you notice, this has been retested from London session, which means it's happened on another session, which makes it high probability that we would retrace to this area. So as we can see, we came back, and this happened during London. Okay, we retested it right here, but we retested it before New York opened. This makes this area a higher probability that we will go back to retrace to it during New York to take the liquidity from London right here. This is how I see the market. Okay, so this is our next key area. We react from this area. We can take advantage of it. Maybe we cannot, but our goal is, our bias is long, so I did not want to actually, this trade I took, but this one I did not want to use this trade because I am bullish basically. So why would I take shorts? Okay, so this is what happened on Monday. The price still respected our area, but we can see that we have some liquidity right here, some imbalance. So this is enough for Monday. Then we go to Tuesday and we do the same thing over and over again. And this week we actually ended up reaching this area, and we actually ended up retracing back to this area. So if you want me to make another continuation video and show you how this happened throughout the week, the trades I took, let me know in the comments. I'm also sharing all those on my Twitter account, so if you want like live updates, you can follow me there, and you can get access to the Discord as well. So now this gets us to our next step, which is the 5 steps that I use, that I actually mentioned here, but now I'm gonna put them in front of you so you guys can see them all. Step number 1, always check if there is an imbalance before a big move. Step number 2, check if this imbalance is on multiple time frames. For example, is this imbalance on the 4-hour, 1-hour, and the 15 minutes? If it is, then the price is likely and has more probability to retrace to this area. Step number 3, be aware of trading sessions. Did this area happen during Asia, during New York, during London, even during New York Stock Exchange? If you are trading New York and this area happened during London, then the price is likely and has more probability to retrace back to this area. Step number 4, where is price likely to go to next? And we can determine that in 4 ways. We have the trend, we have market structure, we have liquidity, and we have imbalance. Those 4 areas together, or each separate but together, gives us more confluence to know where is the price going to head to next. Step number 5, the price is very precise and it will reach its areas to the tick, but the price intentionally sometimes doesn't reach those areas, retraces back, takes liquidity, and then after you thought that you are wrong about the whole idea, price then goes back to the area where you expected it to go. And this happens quite often. How do we overcome this situation, which I was struggling with? I started to set times that I trade, exact times. Let's say at 11 New York time, at 10 New York time. It depends on your setup. You have to test that. And you just come during that time, you set alerts, and you just don't stay on the charts the whole day. Set times. This situation will result in too much FOMO, and the only way to avoid it is to not look at the charts. There is much more that I can share with you, but this video is getting longer, so I'm gonna be making a part 2 of this video. Please let me know if you actually want a part 2 of this video. And if you enjoyed this video, then you will enjoy the strategies that I use in order to leverage from those areas that I'm talking about. Then if you enjoyed it, then you will definitely enjoy this one right here.